DA Hugo. Hi, Irina. Michael. Okay, just a couple of things that I noticed yesterday. Um, May as well go to a little something shorter term. Okay, thank you, Sinatra. A little better. So let me just move you guys out of the way. Oh boy. Okay. Anyway, this was a high that we had Sunday night. Okay, so I look for market tells, right? Oh, hi, Sanchita. How are you? So both NASDAQ and S&Ps put in a high on Sunday evening, right? And had this nice break here. Whereas later in the session, NASDAQ was able to generate a new high. See this? Took out this high. S&Ps was more like a failing rally here. See that? So they keep rotating. That's really the point. So, the FANGs and MAGAs have been lagging and they went to them pretty good yesterday. Only I can't really understand a lot of the strength that you have, a lot of the strength that you have in NASDAQ. Okay. So I want to just show you guys a couple things. And before I get to that, I just want to show you guys the dollar. I don't know if I'm going to have another chance, but the pound rallied to 134 and came off pretty good. So I think that this is, if you want to be short pound, this is where you're wrong now over 34. You're ahead video. I'm not sure if Blake's going to do that. But the Dixie, and not sure if it's going to happen or not, but we could be putting in a higher low right here. But I'm going to just try and be patient and see if we get one more shot down here towards 90.35. The divergence wasn't that great. It was under 30, but everyone's so short the dollar, it could come out of here at any time. I'm going to sit here and be patient. If I miss it, I miss it. But I'm thinking we could get one more low here during the week. We start getting back over 91.20, then I guess that story is not happening. Also, I want to see where the precious metals are at. Should the dollar be able to do this? I should buy the pound. Okay. Anyway, it worked for 100 pips. Should I return them? Okay. Anyway, it's not Amazon, so they won't let me return the pips. They said, Dale, you have to keep them. So anyway, want to see what gold and silver does should there be one more dollar decline to 90.40. I know that Steve could be right that may have been it in the gold down here, and it is acting great. And silver is getting pretty close to a decision point here on this big descending triangle here. And you could adjust the lines a few times, but up around 25 to 25.10 is going to be a very important area for silver. And we'll see if we break down out of this formation. So on the daily, look, we're almost there.
Yeah, Dale, I'm looking at that exact same trend line too.
So. And what, the silver?
Yeah,
same
one. And I think it's a big deal. I mean, if we break above that, we might challenge the recent highs. So
yeah, I mean, descending triangles textbook classically are supposed to be reversal formations, but I've seen so many lately descending triangles resolve themselves to the upside. I have to throw out my books, my old school books.
Yeah, you just get, I'm with you, especially in recent years. Everything's been very much distorted by central bank activity. The most aggressive central bank activity really for the last, has been like the last, let's just say 10 years. So it distorts a lot of things. And and because of that, you have to just go, okay, well, I know where my breakout points are, whether whether the assumption is being long or short, throw that kind of out the window and
Yeah.
just know where the breakout points are at. And I think that's the most important thing as a trader.
Yeah.
Sorry,
And
I'll let you continue on.
all right, I just have a couple more, Blake, and just EG is
Yeah, sure
it
thing.
tried to pull back, and you can't stop this EG. So the euro is still the preferred long as this is in an uptrend. And actually, yesterday we were almost there, and then we did this. I was looking for one more high in euro, and instead, we had this candle here that put that in doubt. I'm still gonna wait for it. I mean, if I miss it, I miss it. It would be commensurate with one more low in the Dixie down to about 90.35 or so down here, and even on all almost every time frame. Let me just run them down. Daily, you still have divergence. It's not great, and I'm not looking for a home run ball in dollar, just something counter trend. The 4 hour, it's a little better. It's still under 30. The 2 hours, the divergence is pretty glaring here, and this is why I'm going to try it, is because I think even if we sell off 50 points in the dollar, 60 points in the dollar, I don't think we're going to take out this RSI low. So we either bottomed here and we're heading up, of course, either or. That's my CNBC analysis. The dollar could head up from here unless it decides to break down and goes down to support, and then it could rally. So it's an either or. And, I'm just going to try and be patient and not be aggravated if it goes from here. So that's all I really wanted to cover. And I'm looking at this gold silver to see if we're going to break out or there is one more shoe to drop for one more break. What would do it would be a decent dollar rally, maybe. So that's about all I see. And keep in mind on the S&Ps, just one thing. I know it's still early in the week, and we could probably make a new high. But if we don't and selling pressure continues, I just want to make you guys aware of where a 2-week reversal would take place. You just count back 2 candles from this week, and 3640 is going to be the 2-week off number. So be careful here. I mean, look at this. I mean, even this recent high has a lower RSI reading than this one here. So, it's a 1/1,000,000th and 10th divergence in the S&Ps. So that's about it, Blake. So it's all yours, buddy.
Hey, give me 1 second.
Sure. Aussie, yeah, I just want to touch on Aussie while Blake's getting ready. The Aussie did this yesterday and really shook everyone out, but it almost looks like it's a 2. Here's 1, here's 2. Maybe it could eke out one more high if I get that scenario I'm looking for in the dollar, and that would be a nice short. One more high, but it looks like this was just another stop hunt yesterday at the highs that we had here in Aussie. So be careful with your longs. I know most participants are long Aussie. I understand why, but now it may be time to just tighten up your stops and be a little more cautious about your longs. NASDAQ. VIX tried to fill the gap, pulled back. Steve showed the gap yesterday. We pulled right back to the moving average and did not fill the gap. So something else to bring on some caution. There's a lot of things Congress has to get done in not that much time. The stimulus package, they have a defense bill that there's wrangling over. And also, I think they have to get something on paper to keep the government open. All those three things.
I think that's kind of a given.
That it usually is.
There's a lot, there's a lot of work to do, and especially if you think about the U.S. government, and then you think about what's happening in Brexit in Europe right now, in the UK and Europe. I mean, they got a lot to accomplish before December 31st, right? The quote
Yeah.
unquote drop dead date. So yeah,
And there's
it's a big rush of things to
yeah,
finish in this crappy year of 2020, Dale.
yeah, and the sticking point for COVID relief is liability. McConnell's not going to pass anything unless there's liability attached to it that people aren't going to be suing getting COVID. Different businesses, I believe that's it, Blake,
Yeah.
isn't it? So
Yeah,
that's
yeah.
a sticking point.
There's a few different clauses that they're trying to attach. So we'll see.
Yeah.
Yeah, there's a lot. There was another thing about um, giving up your stimulus check to get early access to vaccines. The story that's going around, and I tweeted it because.
And I have this guy with us today.
I'm sorry.
Brian Shannon is with us on my camera.
Oh, nice.
Yeah, Brian's going to be with us. Here's his book. I read it. It's excellent.
Oh,
so,
great.
Yeah.
Yeah.
Anyway,
Brian's been, I've followed him for years. And so, yeah, it'll be interesting to hear from him. So
I have his autograph now.
Ooh, look at you, Dale.
Yeah,
got an
it's
autograph.
Collector's item.
I got a couple of those from Mark Chandler. So
okay, I know. And Mark never invited me to stay over at his house. So
hey, Mark, he's
you're
like,
way
next time
ahead.
you're in New York, you come stay. I'm like, yes, Mark Chandler, I'm going to come stay here. But I always end up in Greenwich, so I never get to. Well, we have actually yet to meet up. All the times I go to New York to go back to the trading office, but
yeah,
we will one of these days. Anyway, let's talk about the markets here, Dale, and let's talk about what's. Well, first of all, today is pretty quiet. The cable's sliding a little bit, and I'm gonna tell you right now. This is just so you guys can kind of see the analysis here. I am in the camp that a deal gets done. Will it be the best deal? Will it be the best deal of deals for the UK? Probably not. I'm still in the camp that a deal gets done. I think there's going to be a lot of scares, and the problem with the cable right now is it is trading heavy. We have if you look at the daily chart, we basically been on both sides of the 135 and 132 level, right? So if you think about, excuse me, you think about the stops that were triggered above 135, below 130, below 133 when we hit yesterday's lows, and realize that we have a really big rejection at the 135 level, because that's a multi-year trend line. It's a big descending wedge. Well, I mean, it's a 10, 12-year descending wedge in the making. So the first attempt at 135, obviously we've rejected. I do want to be a buyer though, because I think by the end of the year they are going to get a deal done. But do I want to buy it here? I mean, you could take a shot at it here because you can see all these spike lows that have held in the past through here. Personally, I think we're going to take out some stops for a couple of reasons. I think the market is very short dollars. We just had a conversation in the chat room. If you guys are in the Forex Analytics community, this is the Forex Analytics community. Here's our chat room, so you guys can. And this has been the slowest day of the last couple of weeks, but you have to go back here when I was talking about here. I'll leave it right here. This is like some of the comments from an hour and a half ago. Real money long, the cable. The market is very short US dollars. And a no deal would crush the cable, but that's not my base case. My base case is a deal will get done. But I think that stops can get triggered because I believe the market is very long cable right now. So The question is finding a strategic entry point, especially in a pound in the cable, which trades violently on Brexit headlines. So, I have to say that because it is violent. These moves are brutal. I mean, this is intraday yesterday. You know, we're trading at 134, and then next thing you know, we're trading at 132.20. I mean, you get caught on the wrong side of that move, you might say, oh God, I can make a lot of money there. Yeah, but if you get caught on the wrong side of that move, you're going to get smashed. So it's important to know where you're entering and what your risk is. And so for me, I'm looking at this 618 saying, man, please, please, let me get a dip down here to this 131 level, because I'd love to be long down here, because I know it'd be an AB equals CD. I know it's the 618 retracement, and I know I could stick in a fairly, the pound just ripped.
Deal done.
All right, well, here we go.
Gove is saying, delighted to announce an agreement in principle on all issues.
Agreement done in principle.
Yeah.
Yep. It's done. I mean, well, forget that. I guess we're not going to get it. So,
I could still get it.
I just bought some cable at 40. Let me see. I picked it up at 41. So let's see. See if it'll sustain. Probably want to break above 134. I just bought it here and it's not going anywhere.
Tough game.
How is it not rallying? I don't get it. Why is it not going? I don't understand why it's just not ripping right now. I mean, if you agree in principle,
I guess they need some confirmation from the other side as well. I don't know. Yeah. I thought it would be going higher now, but.
Well, yeah, that's probably right, Stelios. Maybe it is. You need the EU saying, okay, well, yes, there is an agreement. I don't know. It's weird, isn't it? Seem weird. It's like, why can't we get a move on here? And I literally bought the cable right where it's at. Right
Simon just wrote that they've agreed on the UK Northern Ireland protocol. So maybe not the whole thing. I'm not sure.
I don't know. Interesting. All right. Well, I'm not going to stick around.
It's only on Ireland, not everything. Okay. Still, it's a step.
Sorry, I just got out just to, I'm not dicking around with this. So, okay. So anyway, and believe it or not, I actually made a couple ducats, which is not a lot, but anyway. Okay. Thank you, Simon. By the way, this is the power of our chat rooms, and Simon's in the UK. He's in London area.
It's also the experience of a pro, that when you're not getting the reaction that you would expect on an event like this with price action, that you don't sit around waiting for a delayed fuse to be lit.
Thank you, Dale. Yeah, I picked it up at 40. So I basically picked it up at 40 and sold it at 42. So
yeah, I mean,
I picked it up right through here on the spike up as we were chatting. Then we came off and we're just kind of dicking around, and then if you're
not being attached, you're not attached to anything, Blake.
No, because if you're not
that saves your ass.
I'll tell you, I've been in the situation where I've taken it off, and then all of a sudden it rips up 100 pips higher, and it might do it right now. I mean, the thing is, I didn't get the reaction that I wanted, and that's the point. And I'm like, if this is a real deal, if that was the real deal, we would have been trading above 134 and probably already 135 right now, but we're not. So that means there's something amiss that's not jiving, whether it's the EU, EU or UK side. So, again, I'm not 100% sure why we're not rallying, but because we're not, I'm just I'm taking it off for now. So let's talk charts. Okay, I'm gonna get them with you real quick. So I was discussing The cable, I just now it's like, are we even going to get down there now? It's like, I almost think we have to be, it's like these headlines around this time of the day, so gnarly. I'm going to write down support right now as being let me see, the low today is 132.89. And then you have these spike lows here at 80. So I'm just going to write down 132.80. God, how many times have we written down that number over the course of the last couple of weeks? 132.80 again. All right. So that's going to be pretty key support. And, you know, obviously, if you want to be long the cable, if you do feel like I feel like, you know, eventually a deal is going to get done, you know, keep your stop somewhere around there. You know, I'm not going to sit here and talk and try to manage a trade when I'm talking, because it's very difficult, especially on something that's moving as fast as the cable. I'm not going to focus on you guys. And the prices. I'm just going to end up focusing on, you know, the volatility. One of the things about the sterling here is you can see this previous support that is acting as current resistance. So that comes in at 134. Let's call it 134.15. That should be, oops, sorry, that's all wrong. 134.15, wrong area. Sorry, guys. 132.80. It is still a range until we get above 135. It is a range. The euro, nice little triangle formation forming, right? It's a triangle. It's consolidating. Oh man, the cable's trying to get a lift here. All right, I'm not going to deal with it. Resistance right now, 121.50. Support is going to be 121. And by the way, like I said, the market is very bearish and short dollars right now. Okay. Oh man, I didn't wait long enough for the cable. Damn it. That's all right. 50. Did I say 50? Oh my God, there goes the cable. 121.50. Yeah. It's the market is extremely bearish and short dollars right now. So just keep that in mind when you're navigating through this. Okay. It just is, you know, and the market is very, very bearish dollars. So that may not come into play today. It's something that probably will come into play over the course of the next couple of weeks, maybe in the next month or so. Support for the Aussie is still going to be right here, and you can see that trend line support comes into play. That's at 73.50. It's actually 73.45, and then resistance is at 73. Oops, I'm sorry, 74.50. And you guys know this is really big resistance. And you noticed the rejection yesterday, and I want to talk a little bit about the Aussie. So one of the problems with most intraday traders is they or a lot of traders that are trading near term, they're just not looking out far enough. And this is a prime example of the Aussie cleared the resistance of 74.15, and why didn't we get a proper rally on a breakout? And the reason why that is because if you take the post-COVID move, that's the 127% extension of that whole downdraft. Now, on this V-shaped recovery, as you guys know, I'm very bullish the Aussie longer term. I just don't know if we're going to be able to, take out the 127% extension right at this moment in time. We might have to see a little bit of a pullback before a move. So right now, let's note that the 74.50 is really big resistance, and we rejected it yesterday. But a breakout above that would be pretty bullish. So here's the Kiwi. Kiwi came out of an ascending wedge. 70 cents is still resistance. 70.66 is the 618. That's what held yesterday. That will be resistance today. 70.66 and 70 cents is important. Dollar Canadian. Now, this is this was my chart of the day yesterday. If you guys read the blog, this is the butterfly harmonic pattern. Now we have a double bottom setting up. So a break above 128.35 would be bullish near term. That would take us, whoops, that's not what I want to do. That would take us, that'd probably extend out to this 129 level. If we got a double bottom, proper double bottom developed. However, I don't think we can completely write off the bearish, trend of the dollar Canadian. There's still another 161% extension that comes in at 127.33. It is quite possible we make it all the way down there first. But for now, we've got a double bottom setting up. So let's take that. That'll be 127.75, 128.30. It is still bearish. And by the way, the Kiwi is still bullish. I know. Man, this cable is just ripping higher now. Damn it. See what you did, Dale? It's hard for me to do analysis and focus on trading at the same time.
It is.
It's really difficult. You guys should try it sometime. Try going through all these numbers and then trying to be in, when it's not, I'm in trades all the time through the webinar, but being in trades when something is moving this wildly is very difficult to do. When you have, 40 or 50 pip swings, swinging around when you're trying to focus on analysis, it is extremely difficult to do.
Bottom line, Dale, you owe him some money now.
What?
Bottom line, Dale owes you some money now.
Dale owes me bigly. All right, let's sorry, I'm going to finish this up, Steve. Dollar MEX. So the dollar MEX still in this descending wedge, as you guys know. Support 1975, resistance is 20 now, descending trend line. So
it's still no trip to Hollywood yet.
This is still bearish. And where are we at? Dollar Swiss. I was talking about the Euro Swiss to the folks in the chat room today. I'm surprised it's back below 108, frankly, especially with the Euro above 120. I'm really surprised that the Euro Swiss is back below 108. I'm not trading it right now. I'm just making an observation with you guys. Support 88.80, resistance is 89.80. You guys, the same numbers as yesterday. I think it's the same numbers as yesterday, if I remember correctly. If you are using Forex Analytics, here's yesterday's bias chart. 88.90 to 89.90. Actually, that's probably more accurate. No, it might have been my dyslexia kicking in yesterday that mistyped that. Anyway, okay, continue on. US dollar, Norwegian krona. So we are holding this 870 level right now. Obviously, resistance is all the way back up here at 895. I'm not overly excited about the US dollar, Norwegian krona at this moment, but it's one of those situations where, hold on really quick. It's one of those situations where you could get, move back towards 896 at any time. So it's 870 as support. I'm just going to keep it as bearish. You guys know that double top still goes to 861, I believe. 863. Sorry, this double top, it still has room to go. So if you guys think that the US dollar Norwegian krona is finished with its down move, I don't think it is. It just, we might get a temporary bounce before, resumption lower. Dollar index, so 90.50. And remember well, we should probably look at this because of yesterday's move. Right there at 91.12. While we're below 91.12, you have to stay bearish. But that doesn't mean we can't, make it up there. And let me also point something else out. This is a 4-hour chart. Look at relative strength. Okay. We had a divergent relative strength that suggested that we were going to bounce. But now, now RSI is mid-range. You see how it's mid-range? The reason why that's important is because now that it's mid-range, we can resume a downtrend without much of an issue, right? So just think about that. It's we've worked off the oversold conditions intraday. So now if the dollar wants to resume its downtrend, it is free to do so technically, looking at relative strength. S&P, notice how we are holding the 3770. Then we have 37, here, let me move this really quick. We have 3725, 3625, sorry. I don't know why I said 37. 3625. We have to stay above that support because that is the previous wedge support. So for right now, 3670 is support, and then resistance is obviously going to be, that's 137.07 and then 137.50. So 37.07 and 37.50. Okay. And we are bullish. When's the last time we've had bearish on S&P bias chart? It's been a long time, right?
2008.
Maybe. Yeah, I think you're probably close to correct. Dollar yen, really quick. Same crap, different day. Remember 103.70, 103.65, 104.75. You guys trade it, because I wouldn't touch it with even Stelios's money, which is bazillions.
Yeah, not quite.
Okay, 103.65, 104.75. It is range bound. No reason to even trade that thing. And like I've told you guys before, I really have no desire to trade the dollar yen because I have no idea what its drivers are. You can't stick your finger on whether it's yields or risk appetite or precious metals. It's like the dollar yen it's not tradable. You have to just trade a range right now. So gold, we broke back above 1850. That's huge for gold. So now 1850 is support. That's for XAU guys, not the futures. So are we bullish now? No, I still think we're range bound. I think this created a little bit of a squeeze. I think 1888, the 618 retracement of this move should offer resistance today and maybe even up to 1900. So I'll write both of those down. And then I am finished with you guys. There's your bias chart. It's done. And frankly, today is a consolidation day. I think we have to, the cable obviously has some volatility. I would love to buy the pound on a dip. Based on the news that we just got, I'm gonna have to do a little bit of digging and a little bit of research here. Maybe we won't get that dip. Maybe we have to settle for dips to 133.50 as being places to be long. It's really hard to say. Stelios, how do you read the news that just came out regarding the UK? Because you've had a little bit of time to
Yeah. Well,
digest it a little bit. So
yeah,
what do you
well,
got?
this is one of the sticking points. Remember, it was fishing, it was the Irish border, and what was the other one? There was three. Anyway, one of the sticking points. And for me, anything that gets resolved is positive, can only be positive. And I know we did have the Europeans saying today, one of the spokesmen, I can't remember who, saying, "Oh, we're more than happy to continue negotiations after the new year." I don't think the UK are going to do that. I don't think the Brits are going to do that. They're not bluffing. I think they're going to go at the end of the year, deal or no deal. So I think it's definitely a good thing. I can't see how this thing is bad. So, so I stand by my prediction. I agree with what you say. I think there will be a total deal at some point, maybe good or bad terms. I don't care, but I think that's what's going to happen.
So Amanda's just writing in our on Skype here. She said this agreement is regarding NI protocol, North Ireland protocol. So it's makes the IMB irrelevant. That's all, in my opinion. Has nothing to do with 3 outstanding issues. So in Amanda's in London. She's in our chat room. She's kind of taken the next couple of weeks off because she hates end of year trading, which she's been with us for years, and she's a staple in our chat room. But obviously, she's keeping an eye on the markets a little bit because of Brexit, and she's in London. But she stays up on all the relevant news, and so she's in here delivering data and analysis to us, even though she's trying to stay an arm's length away from the market. So keep that in mind, that she's like, be skeptical about what you're seeing here. Okay. All right. Well, Stelios, is Steve? Oh, Steve is here. I heard him a little bit earlier. So I'm going to pass it to you guys. And remember, I got to say this before I leave you. Today's guest, Brian, I've actually followed him, I want to say, for probably 7, 8, 10 years on Twitter. He's a very good technician. Less currencies, more equities, but still he's a really wonderful technician. I think it's very important if you guys have the opportunity to stick around. Also, I want to mention that I'm very excited for this Friday. Amir Dullah Shahi, I know I mentioned this last week, from our chat room, and he's been in our community for about 15 years or so. He will be with us on Friday. He's the most he's like family to me, and you guys will hear his whole story, and he's probably one of the most amazing human beings you're ever going to meet. So, and I have met him in person 5 times. I've met his wife in Maine and Baltimore and different states. He's just a great guy. Anyway, I'm very excited to interview him on Friday. His story of perseverance as a human being is the story that we all need in 2020. And it's an amazing story. So you guys have to hear it. So be around on Friday. All right, guys. And remember, if you're not part of the Forex Analytics community, it's $1 to try it out. Try it out. Come join us in the chat room, because for 10 days, you'll at least be able to join us in the chat room. All right. It's all yours, Steve, Stelios. I'm out.
Thank you, Blake.
Thank you, Blake.
Thank you very much.
And see you, Dale. Thanks, Coach. See you, Steve, Stelios. It's all yours.
Hey, guys.
Hey, Dale.
Hey, so more Brexit drama then.
Oh, yeah.
When I saw this headline
Hoorah.
saying from the Europeans saying, "Oh, we're more than happy to continue this in the new year," I thought, "No, God, no, please! I can't take
Anything
anymore."
but this.
I have friends who live in the UK and who are Greek and they work there, and they have no idea what's going to happen the 1st of January. So I guess I'm frustrating. I guess it's a lot more frustrating for people who are actually affected by it. Good luck to everybody. But the bottom line is that we seem to be slowly moving towards something. I don't know how to describe this. We obviously don't have anything firm yet, and there needs to be agreement on everything. But I think the Europeans think that the Brits are playing are bluffing, and I don't think they are. I think Johnson is crazy enough to just say, sod it, we're out on the 31st. Deal or no deal. But
To be honest,
anyway,
that part doesn't make him crazy. I mean, at some point you need indeed to draw a line and say,
of course. Of course.
otherwise, literally, I think that could draw out for a decade. I don't know. I mean,
Remember when Boris Johnson got elected, moved to power, and May left? I said, look, if anybody's going to get something done, I think it's him. May just dragged everything for 2 years, doing nothing and showing weakness. And Boris Johnson, well, at least he's had a different strategy, and a much more direct strategy and confrontational strategy. And if something's going to work, I think that might be it. But obviously, I'm not a politician. I don't know how these things work. But
to be honest,
how I
I never
see it.
figured out the logic behind electing May. I mean, Margaret Thatcher, May. Yeah, it's like, two opposite sides of a coin.
True. Unfortunately, good and punchy leaders are very hard to find these days. Anyway, it is what it is.
Indeed.
So, the UK, we're getting closer. We're still waiting to see what happens. Say, it's not like they've left it too late. This 21 days.
True.
Is same with the US with the stimulus plan. We seem to be getting there. I mean, we are going to get there. I don't think anybody can put it on themselves to basically not give the country this lifeline that's needed in light of this COVID outbreak and everything that's associated with it. And the same applies to to be honest, with the Brexit negotiations. We're in a very surreal part of this decade and very difficult. And I don't think any politicians want to say, right, I'm just going to pour some more, gas onto the fire and make it even bigger. It's I don't know. Anyway, maybe I'm just naive, but I think eventually there's going to be definitely the Americans are going to push the stimulus plan through and see what happens afterwards for what is it, $1 trillion or so. Otherwise, COVID-wise, there's I read there was news about the Pfizer vaccine being 95% effective and really having no problems anywhere, so it's being approved. And I think this week or next week they're starting in the UK and in other countries, so it's here apparently. Let's see if people who take it, come out with 3 heads afterwards or something. But I think
if they're thinking heads, that wouldn't necessarily be bad.
I think that's good for risk assets, and it's definitely not a bad thing. But again, I think we're overvalued in so many things that I'm very careful about. I'm very careful about being long here. I'm not long. I'm not short. I'm just still watching it. And what else we have? We had some economic data, but really nothing to write home about. Japan GDP slightly better than expected. Again, with these big numbers, absolute numbers. GDP used to be 0.5%, 1%. Now we were expecting 5%, came in at 5.3% quarter on quarter. Who cares? That's just noise. But slightly better than expected, and really elsewhere nothing.
Yeah, and USD yen was very enthusiastic about it.
Yeah, I can imagine. Yeah. Well, there will be a time when 0.1% in GDP counts. This is not time. So I think we're going to have to wait like a year until economic data become relevant again. We have to go back.
True.
To some kind
the
of
only relevant thing now is stimulus.
Yes, the number, right? That's all we're looking.
Everything else is small print and
and
details.
look at the Fed's balance sheet and equity indices.
Yes,
there's a pretty good correlation there. Although a lot of people say, no, that's just coincidence. Yes,
of course
it is. I don't believe in coincidence.
Totally coincidence.
Yeah. Otherwise, it's been. I don't see anything else.
It has been a very quiet day. I mean,
the pound really has been.
We've had some intraday volatility in the pound, but excluding that, because when you get headlines about something important like the progression in the Brexit talks, yes, it makes sense. Some people are going to be getting long, some people are going to be closing their shorts, and the opposite. But with the exception of that, I mean, everything else seems to be in hibernation, right? I mean, and keep in mind that in the vast majority of the cases, no movement doesn't mean we're getting ready for a reversal. Usually, consolidating when you have a previous trend is just that trend taking a breather before it can resume. So in the case of euro, I was here since the beginning. I know that Blake showed the little pennant triangle, whatever you want to call it, that the euro USD seems to be forming at the moment. Here it is, a flag, whatever. I mean, we need a little bit more of a price action. In the case of the DXY, you can clearly see here on the daily that we've had like 3 indecision candles if we count today's, although, it's early in the day. In the case of the Aussie, the Kiwi, the CAD, everything seems to be just consolidating its prior gains versus the dollar. So, we've mentioned it multiple times that yes, from a risk reward perspective, if you have had no exposure, shorting the dollar here might not be the best proposition. But at the same time, don't forget that I've been advocating for months that don't fade the dollar weakness. So I do believe that until proven otherwise, we are in an environment where risk is bid and the dollar is being sold. And most likely, these short-term consolidations are going to be resolved in the direction of the previous trend. So I would be expecting the USD CAD to resume to the downside, the DXY to resume to the downside, the Euro USD to resume to the upside, perhaps even indices, pushing higher. Although I have to say that, might happen somewhat reluctantly. I mean, we've got to the point that we're testing some nice resistance areas, and clearly momentum has been, waning somewhat. I mean, keep in mind that we've had this year, has had 2 phases, right? One is the COVID sell-off, and the other one is I'm not going to call it a COVID recovery because, we haven't recovered. We've pushed to new highs. Keep in mind that from the end of the COVID sell-off, near the end of March to today, we've had a 70% rally.
How about calling it the government intervention rally?
Of course. I mean,
both Fed and fiscal.
Of course.
Yeah.
There's no question about it. That's exactly what it is.
Yeah.
So because, you'll hear a lot of stupid arguments that, oh yeah, the markets are rallying because, they're pricing in, a vaccine, etc. But, the thing is that unquestionably, we had excessive valuations pre-COVID, and the market wasn't even pricing in the probability of an outlier accident type of event like COVID. So now we're talking about the likely resolution. Yeah, the likely resolution of an unimaginable problem for the economy that nobody was pricing in. And we're already a lot higher than we were, pre even imagining that something like that could happen. So, all the BS that, it's the market looking forward. Yeah, I mean, the market looking forward, the best thing it can hope for is for the economy to go as fast as possible to where it was. And we had already priced that in, and a lot of economic growth, quote unquote, and mostly actually income, extra earnings for companies, etc., which they plunged. So, I mean, there is no other way to explain this magnificent rally than stimulus, and stimulus. So, any kind of argument that it has to do with economics and anything else, that's far away from anything that has to do with reality. In any case, we are where we are. And we've been advocating that you shouldn't be trying to take the other side of the market because it's dangerous. At some point, we're going to have a sharp sell-off. There is no question about it, because the market needs to get rid of weak hands, as it always does. Whenever we see that happening, keep in mind that 3,500 is the first area of support. But it's
a lot of these companies are delivering earnings, Steve.
A few of these companies are delivering earnings. To be exact, if we're talking about numbers, for example, the broad index, the S&P 500, what percentage of these companies do you think are actually have actually benefited from COVID conditions? What do you think it is?
10%.
So not a lot.
I'm guessing. I have no idea. All I know is I've been watching.
I'm assuming it's less than 10%, but even if we assume that it's 15% or 20%, which it isn't, it's still few of these companies, not a lot of these companies, right? A lot of these companies would be 60%, 70%, 80%, but it's a few select ones. We know the names, right? It's like, what is it, 10, 15 companies that have benefited from that, mostly that matter. I mean, that their valuations actually, can make the indices move. So, these are the companies that have actually been driving things higher. So, if you take those companies away from the indices, you'll see that the indices, haven't really done anything. Some of them would even be negative, but it is what it is. And if you want to trade an index, you have to take into account which are the companies that move the index more because of their valuations, right? Or their price, because not all indices are being weighted in the same way. I mean, the Dow Jones is price weighted, if I remember right. So there are some differences there as well. In any case, so leaving FX, which, as I said, nothing has changed since yesterday. The only thing I see there is consolidating prior gains against the dollar for the vast majority of the pairs. We are seeing gold and silver continue the recovery higher. Now gold has crossed over the 1850 horizontal support resistance area we were talking about yesterday, increasing even further the chances that we've seen the low here. So keep that in mind. Silver is, getting closer and closer to this channel trend line resistance. A break higher, I think, is more or less, a guarantee that we've seen the low here as well. Platinum had a, quite negative day, but found support in the first support area. So, I wouldn't be really going negative there. Copper holding its gains. I mean, copper isn't really going down. I mean, even on negative days, you have some days that it looks like you're going to have a big sell-off, and by the end of the day, buyers have stepped in, and they've softened the move lower quite a lot. So don't bet against that either. Crude oil still above this little pennant, and likely another little consolidation before we move higher. Natural gas, as I've said, I'm watching this channel, nothing has changed here. What else? Cryptocurrencies are moving, somewhat. So there it is. So I'm monitoring here a couple of things having to do with cryptos. Bitcoin, I'm monitoring this symmetrical triangle. If we manage to hold it, we can get a push higher from here. But we have to see if that's the case. And here's another triangle in Ethereum. So cryptos have given back just a fraction of their gains, but they seem to be consolidating. So in essence, correcting more in time. That tells me that there's a good likelihood that we're gonna get a resumption higher sooner, probably, rather than later. So that's another thing to consider. Anyhow, let me go through some of your questions and see if we have anything Any special requests today? Dollar down, indices up, economic cycles. Yeah, that's the name of the game at the moment, at least. Did you cover silver? Yes, Georgie. Nothing really has changed in silver. I mean, I think both the metals have a very good chance of having already put a low in place, having to do with silver currently testing a resistance area, but I'm mostly interested to see what's going to happen if we make it to this channel trend line resistance. I think a break higher, it's, you know, more or less guarantees that that was it, and we're headed much higher from there.
Gold's acting better, buddy. In
Than
the last
silver?
few days. Yeah.
Yes,
today,
in the last few days, the recovery in gold has been better, although the move lower in gold
was stronger to the downside.
yes, exactly. So perhaps it's making up, you know, for that somewhat. There is no question about it, though. You know, a lot of people will caution and mention, you know, some warning signs like an exodus from gold funds, so on and so forth. But what I can tell you as a fact is that the conditions for monetary metals to rally, you know, continue to be what they were, meaning it's like the best environment you can think of for them to sign. That's number one. And number two, just by being out there and speaking with people, and, you know, I know a lot of people that are in finance, and many of them have, you know, assets under management, etc. I don't know a single person that's like, you know, good at what they do that aren't seriously, you know, considering gold to have more upside. And I'm pretty sure that whatever sell-off we get, real money is coming in and bidding the price higher. I think that we even saw Berkshire Hathaway do the same. I mean, they hadn't actually ever had any exposure in gold and silver, and they did buy for a period of time, like what did they buy? Barrick Gold, one of the
Barrick,
miners.
Yeah, Barrick or Newmont, probably Barrick.
Newmont, perhaps it was. Yeah, one of the two. I don't remember which one. So in general, you see that you know, a lot of people are getting exposure in gold and silver. In my opinion, you know, they're doing what they are supposed to be doing. Actually, they should have done it earlier, if you're asking me. In any case, no problem. In any case, it is what it is, and in my opinion, there's more upside. And clearly, in my eyes, these moves to the downside are corrective. So, you know, for me, it's a matter of when we're going to break higher, not if. It's all about when. And I think it's not going to take much longer.
Everything is when.
Yeah, but no, some things never happen. You know what I mean? Or you're not sure they will happen. Having to do with gold and silver breaking higher, in my mind, it's a given. You know, it's about just when. You know.
Okay.
In any case, we do have a guest, and he's here.
The when for Brian Shannon is now.
Is right now, yes.
Okay, buddy.
The future just became present, right?
Yes. Okay, Brian, I'm going to get you set up here. Hello, Brian. Welcome back to Face.
Unmute. There we go. Can you hear me?
I could hear you.
Fantastic.
And I want to thank you for this, buddy.
That's right. I forgot I sent it to you. It doesn't really show up on the screen. It's one of those invisible books.
Oh, yeah, it is. I know this won't show up. It was written in invisible ink. Understand market structure and profit from trend alignment. Autographed on top of it.
You've got to squeeze lemon juice over it to see it.
Oh my God, I didn't know that. I've never seen that before. Well, thank you so much for sending this to me. I've read it, and you know, a lot of the ideas, you know, some are universal, but it's always good to reinforce the things that, you know, we think we know, but we have to be reminded of. So,
Yeah, exactly. And that's, you know, part of what we do each day in educating others, Dale, is, you know, reminders to ourselves. I mean, like they say, the best way to learn is to teach.
you know what, I really agree with that. You know, there's so many times. And Brian, do you want to share your screen or
Yeah,
not
let
today?
me find that
You don't
panel.
know how many things I discover technically when I go through a review of different markets, and while I'm doing it, and you know, people think I'm, you know, just doing it for them, and then I see things that I wouldn't have seen if I hadn't have done that review with them. So, you know, it's kind of like practice makes perfect, and you know, uh, going over different instruments with people is practice. And you're right, it reinforces things that you may not have seen in your normal routine.
Yeah, I mean, I do it every day, and you know, it's as a reminder to myself, and it also just kind of gives you, you know, forces that you know, you probably already have the discipline to look at the markets the way you will, but to take that deeper look and say it out loud, and you know, have it, you know, hear yourself say it, it prevents me from making a lot of stupid mistakes. I'll say things, you know, about the S&P 500, like right now, and I'll say, listen, we're in an uptrend. Let's not overthink it. It's higher
Right.
highs and higher lows. Let's not try to capture. So you know, my time frame, Dale, I think you know, is that of a swing trader, and one of the main things that I look at is, you know, here we're looking at a 15-minute time frame, and this orange is simply a 5-day moving average, and I have that 5-day moving average on my 30-minute chart, and you know, on my 65-minute chart, and generally I look at it as, while we have a rising 5-day moving average, it's innocent till proven guilty. As it starts turning
Like that.
sideways, we're neutral, innocent, neutral, and then, you know, here we're undergoing some consolidation profit taking. It's guilty till proven innocent. So I just look at it as, you know, moving between those, and that gives me my, you know, market bias. But what we're seeing in
Yeah.
equities, yeah, go ahead.
No, I was just, I know you're a big believer in multiple time frames, and actually I do drill down to the 15-minute. I don't go any lower in time frames. Do you?
I do actually. So when I'm
Okay.
looking to, you know, so the way I really want to look at a swing trade is I want to start with a daily time frame.
Okay.
So I'll look at something like this stock, SDGR. Let's just clean it up. And SDGR, you can see, you know, it just broke some resistance here, and that resistance is holding a support. We've got a rising 20 and a 50 and a 200-day moving average. And more importantly to me, you know, that confirms the buyers are clearly in control is when I put a volume weighted average price off that prior peak. And you can see how it's now holding in there as that support area. And we're holding above the volume weighted average price from the IPO. So I'll start with a daily chart that looks like this. And I'll say,
Right.
okay, you know, it's got what you would look for in a chart. Let's go down now to a 30-minute time frame and try to make some more sense of it. So we have, you know, we had this nice run, you know, from, let's just start it down here at the beginning of November, and then we can anchor another VWAP off of that. And you can see we, you know, we had this nice run, a little shakeout last week. So this is, you know, basically a shake and break. And then we get back above that level, and so each one of these is 30-minute. Now I'm looking at it, and I said, you know, just for a little bit more detail, I'll go down to a 15-minute time frame. But
Mm,
and then I'll look at, you know, for instance, yesterday's action. And when it comes to an entry, I didn't enter this yesterday, but yeah, I wrote an article, I think it was 15 years ago, called "Chase the Gap or Wait for VWAP." Meaning, when it comes to equities, and you know, you don't want to chase that 930 open. Instead, let it settle down a little bit, and then as it gets back above the volume weighted average price, that's where you want to get involved. with a stop below the low of the day. I don't want to wait for the opening range bar to be taken out, because in this case, that's a $1.25 higher and close to the high of the day. So I want to get involved back in here with a stop below that level. Yesterday, we closed below the volume weighted average. You can see the volume weighted
Yeah.
average price held as support, and then we closed below it. So for instance, today, if we, this is on my radar, and I'm thinking, maybe back above yesterday's high, but if I could get a little bit of a cheap buy, and the market's opening a little soft, so I might not do a cheap buy. But if it was to get back above yesterday's VWAP, and then here we would see today's action kind of, let's say it opened like this, I would do the same thing. I would wait, maybe it comes down and holds that 2-day volume weighted average price. And then I want to be a buyer as it gets back above today's volume weighted average price right here. And I would probably set my stop pretty tight under there. So the point is in that exercise, to show the anticipation of how I might want to trade this stock, which I think is set up for a nice swing trade, but I want to drill down to to get the best entry possible by using even shorter time frames.
Okay. There's a couple of standout volume bars that were down there on your chart. Does it mean anything to you? Like the big green volume day, there was a big red volume day. Is volume, most technicians say volume precedes price. Is that part of your philosophy? Is that why you have volume on your chart, or is it just decorations?
No, it's kind of decoration. Truthfully, I mean, so the way I look at it, Dale, is it's about the volume weighted average price, which is
Okay, VWAP much more important than pure volume.
Yeah, exactly, because it tells
Okay.
us the actual who's in control from any certain point in time. So for it, I generally though want to see an increase in volume with price activity and diminished as it consolidates. I mean, that's the general what we're looking for. The problem with big volume bars and that sort of thing is volume tends to peak at the turning points that the biggest volume days typically occur right at the top, and you can see that's the case in both of these days. So a lot of people will hang out waiting for volume, and then they're like, well, that's the biggest volume, let's get involved up here. And it's like, come on, look where the stock came from, and now you're being liquidated into. So what I would rather do is look at a stock like Solo on this 30-minute chart, and you can see what I have drawn in here. I've got a volume weighted average price from the beginning of November, and then off of this peak. So when I place one off that peak, it tells me the volume weighted average price from that point. So the volume, price, volume, money's coming out of this stock so far, from that point. However, from this little shakeout low, we're now starting to see it maybe emerge as a level of support along with that rising 5-day moving average, potential support that is. So my plan for this stock today is if we get it back above this little level, my stop will go just underneath the conjunction of that 5-day moving average and that volume weighted average price, because it tells me the average participant from this shakeout low starts losing money underneath that level, and the average long might start to press underneath that level. So if I can get involved up here with my stop underneath that level as protection, I'd be looking for it to potentially run up to the volume weighted average price off that peak. And you can see I already drew this in. And I'd be looking for the potential that, maybe it slows down at that volume weighted average price and digests, maybe gets a little shakeout, and then starts to run again. So price, volume, and time are the components of volume weighted average price, and it is of course volume weighted, so it tells me the psychology. I kind of view it as the best sentiment or psychological indicator there is, because it can tell me factually from that high point what's the average price that people have paid for the stock or shorted it at. So I know that's where there's likely to be price memory, because that's where the average price transacted.
Yeah, so the VWAP, I just thought of it as a way of pulling market memory, which is from the left, and pulling it to the right to make it part of what's happening now. Instead of pivots that a lot of people use, the VWAP is kind of your way of showing market memory in current market um, action. Is that correct?
Definitely. Yeah, yeah. And that,
Okay.
so another thing, Dale, is I'll use, I do use, the traditional, these people call them the floor trader pivots,
Yeah.
just because when I get on a stock like this, I'll, 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 I'll try to get involved, pretty aggressively to start. So I might look at it and for instance, get involved above this little level right here and then maybe sell some to the breakout buyers. Or if it runs up to, you can see I've got the pivots on here. A lot of times,
Yeah.
daily R2 will stop these things in their tracks. So I typically sell a third up near daily R2 for the session. Then I raise my stop, hopefully to break even or so on the balance, and then let that final third kind of just the definition of trend, higher highs and higher lows, and see if I can continue to raise it up underneath successive higher lows like these, and maybe get stopped out here, get involved again, and then end up getting stocked out up there. So it's about trying to listen to the message of the market and basic tools. So it's
Yeah.
pretty much multiple time frames, VWAPs, and some pivots. But you know,
Yeah. So can we talk about, you're a veteran, you're an author, you've been doing this for a while, so you've had longevity. And when people first get into trading, they get obsessed and they sit at their platform for 18 hours a day, and they're waking
right?
up at night to see where things are. Um, I feel that one of the things that, or just a money management technique that has given me longevity, is just the simple method of having taken something off and moving my stop to BE, which takes all the pressure off you as a trader. And the less stress, the less pressure, the more longevity. Is that part of maybe your favorite stage of the trade, where the worst thing that can happen is you make money?
Yeah, I love that, and I always want to. What I like to deal from a position of strength. And if I'm going to hold something overnight, I don't want it to be a loser. I want to have taken a little bit off. And sometimes people get confused. They're like, well, Brian, daily R2 is only 22 cents away, and you think this stock can go to that VWAP at 9? Why are we taking some off? It's not about making the 22 cents. It's about reducing the risk and
Yeah.
the stress. And the way I tend to get into a trade is I generally get in, pretty heavy relative to what most people would say your initial position would be. And the reason I do that is I don't scale up, and I don't average down. My strength, one of my best, strengths in the market
Just
is that I
entries.
is entries, yeah. And if I can get in with that tight stop, I can trade way more shares than if I'm giving it a loose stop. But if I have a tight stop and it runs, immediately, well, I realize I've got a pretty good sized position in here. So I just want to reduce my risk so that again, I'm dealing from a position of strength and not just freaked out because I can't get up to go to the bathroom. I'll wait. I might wait to get that first third off before I go to the bathroom. But
Okay.
once I do, now I can breathe a little bit easier, or just it is that peace of mind as well is what makes a huge difference.
And you brought up a great point, because you don't know how many times I've seen traders try and squeeze out the last fraction of a trade with a limit order. And I know you need limit orders when you're sleeping and you're away from your from your trade station, whatever you use. But why have the additional stress of an unable, You're not filled. It doesn't get there for pennies, and not just go to the market. And I don't know about you, but I also feel that way about my entries. If I like the trade, it doesn't matter if I have to pay up a little to be in the trade. I'd rather know that I'm in the trade, and maybe I'm taking on a little additional risk because I didn't get the precise entry that I was looking for, but I don't have the duress of waiting to get filled and then potential opportunity loss if it works. And if it doesn't work, it's not that much more of a loss anyway. So I have this saying that limit orders can limit success.
I
Have you
agree
seen that in your
100%.
traders?
I do, you know, that they'll try to, you know, one of the most common questions that people say is, well, Brian, what's the price target? And, you know,
Yeah.
my answer is, you know, for a long, it's higher. We have levels of interest. And
I love that.
I don't do it to be a smart ass or evasive, but, you know, we have a level of interest on this stock at that VWAP. So, you know, that's not my price target. It's a level of interest. I want to see how it behaves there and
Yeah.
maybe raise my stop a little bit, but it's up to the market to tell us. You know, I look at it and say, let's focus on risk management. If we can buy right here with a stop pretty close by, you know, 35 cents away, 40 cents, let's say, and it starts moving, well, we reduce our risk right here. And,
Yeah.
you know, some people start belly aching that, you know, hey, but it can't continued higher. It's about the process. It's not about all the time making every penny, like you said. It's about, you know, running a business and not waiting. No one's that smart. And some people will say, well, Brian, do you ever, you know, sell at that VWAP and then sell short? Of course not. No, it's in an uptrend. Why would I, you know, try to halt it myself and, you know, think I'm so much smarter than all this momentum? I would rather, you know, just avoid it. You know, if the stock's in an uptrend and I'm not involved, I'm not going to be the guy who tries to pick the top. I have been that guy, trust me, and it's
Yeah.
been the most.
We all have, Brian. Yeah.
uh,
And you know what mistake I finally have overcome. I mean, it took a long time, but say, for example, I'm looking for a short that's above the market. And in the old days, I'd have so much confidence that it was going to get to that level. I'd hear in my mind, Dale, you're looking to sell it up there. Why not just buy it and ride it up to where you want to short it? Because it may not get up there. That is, so that's not the trade. The trade is to short it at a level. Doesn't mean because you want to sell or buy something at levels that you trade it until it gets there, because that is not the trade. But I'm sure I'm not the only one that comes into my head. Well, if you think you could get short up there, why not be long until then?
Absolutely, I mean, agree, because the trade you're looking for, you know, if you start going against it, now it's a completely different, you know, mindset as well, and it can just, you know,
Yeah.
damage the way you look at it when it does get there, and then you might start thinking, hey, well, I'm smart, I'm on this thing, and let's see what we can maybe squeeze a little bit more out of it, rather than stick to the initial, here's my plan. Um,
Right. Right.
you don't change house colors, you know, halfway through the project. You go through and you say, hey, I said my house was blue, it's blue, and let's see what it looks like when it's done.
How much preparation would you say on average for a trade? I know that most of my better trades are planned on the weekend for the week ahead. Um, and every once in a while, I'll do something on the fly, but that's a lower percentage trade for me because I haven't planned it. It's almost impulse trading. Um, how much preparation do you take for your trades? And do you ever have to react during market hours to something that you haven't planned, as far as maybe a new trade or getting out of a trade? Or is it you have all bases covered going in? So I know it's a multiple part question, but I believe the most important part of it is what type of preparation do you take before you enter a new position?
Yeah, I mean, I try to be as prepared as possible. That's why when you look at a chart of a stock that I'm looking at, you see all this stuff on here that I've kind of thought through. Here are the potential scenarios, and if it doesn't give me an entry, well, I sit and wait. If
Right.
I enter and it breaks down, I've got to set my stop because I'm getting involved because I have a higher high here, and this is the most recent relevant higher low for the time frame I'm trading in. If I get involved here and it breaks back down below this low, well, my definition of that emerging trend no longer exists. So I've got to get out unless I want to fight, the forces of a trend, which are, higher highs and higher lows. If that definition isn't there, why would I still be there? So, the beginning of the day for equities, everything, the bell rings and, you've got to manage your open positions. You're looking at these stocks that you're stalking. I've got alerts set. I've got things clicking off all over the place. And it's the most stressful time without a doubt. And it's a great time to just slow down and take a breath, focus on the things you're in first, realize you might miss some things. But the plan has to be, you can plan for, set your what you think is your plan for the day, but then the
Right.
market does something completely different. And, what a lot of people do is they'll fight it. And, we know the results there.
Yeah.
Or you just have to sit on your hands and adjust to the new information. Our plan is static the night before, but the market is dynamic as soon as it opens.
Great.
And we've got to realize that the plan is only as good as the information and the follow through that the market allows you to have. So it's kind of more, it's an outline, not a plan. Once you start implementing it, if the market conditions tell you to, then it shouldn't be as difficult as sometimes it seems it is, because we do still, get in our own ways.
Okay, and I know you're not a forecaster. You're a trader, and you're looking at the S&P chart. Do you have any kind of line in the sand with your first chart that you showed here, Brian, the SPY chart, where you think that longs have to become cautious and be raising cash? Would it be under that moving average? Would it be under that previous double top? Do you have a bull bear line you ever use for the general market?
What I generally tend to look at, Dale, is so. For instance, this prior little peak right here is pretty important, and we'd like to see that defended. So
Yeah.
if
That
we
was
get
a Pfizer news peak right there.
okay, right. So if the market comes down to that level, I'm not so concerned. But then
Right.
if it starts doing this and that 5-day moving average starts to curl over, and then we start
Okay.
to see something like this happen, well, that tells me
Right.
we're no longer in a condition where my swing trades on the long side are going to be working well. And the interesting thing is that I look at so many stocks each day that I really get a better feel for the market by looking at the stocks than actually by looking at the index. In that, people are
That's a
always
pearl.
asking me, "What's that?"
That's a pearl, because most people feel they get a better view of the market by looking at an index, and you get a better feel for the market by looking at individual stocks. And I've seen other real good stock traders do that. Why do you think that is, that you get a better feel for the market by your universe of stocks rather than a stock index?
Let's say you're talking about, an index such as the semiconductors. You're going to
Right.
see, and the semiconductors are in this massive uptrend. But where do you see the strength first? Do you see the SMH moving first, or if you're looking at the components in the SMH, you're going to see that 2 or 3 of them start to emerge as leaders first, and
Right.
then a couple other ones start to stop going down, and then 2 3 days later, as the SMH chart starts breaking higher, so for instance, you're going to notice the strength in a couple of stocks right in here. people are going to start recognizing the breakout here. And a
Yeah.
leader might have gone from, might have made a 6% move already. And I'm in that. And, the components lead the sector and the index. They can't move without it. I mean, now the futures, the S&P, of course, the futures market is so deep and liquid that the tail can wag the dog.
Yeah.
But I think that, just getting a handle, and as I've been telling, my subscribers, listen, we've got this massive uptrend. Quit trying to be so cute and calling it top because of a measured move or whatever. Have levels of interest. There's nothing wrong with that. But if we're riding stocks higher, like this RYAM from 468, and it's still behaving well on this weekly and daily chart, we've got a third of this one left, and we're just raising our stop. Let's just listen to the message of the stock. If we get stopped out, we get stopped out. Our stop is currently right under here. Let's give it room, and not worry about the market so much. Let's focus on what are we doing in this stock. And I mean, here's a perfect example of why I look at a 5-day moving average.
Right. Look at that. Hugs it. So how do you identify, besides a chart that shows strength? I'm assuming you want to be long relative strength leadership rather than the ones that are being dragged along with the market.
Yeah.
And how do you identify those to know, everything's trade selection to me?
Yeah,
I mean, for example, you could be bullish semiconductors, and if you didn't do your research, you could choose the wrong one and not even make money. Yeah.
You could be in Intel. I mean, look at Intel this year.
Good example.
Versus SMH. I mean, Intel's just a piece of garbage.
Yeah.
It's just, terrible. You don't buy, a lot of people get stuck. They want to buy name brands they've heard of, like Intel.
Right.
And as a result, well, they're down pretty big money this year. The average price this stock is traded at this year is actually right at the 200-day moving average of 54. The average long is down 4 points in this incredible bull market for the semiconductors. So to me, the stock selection is about, doing the homework and looking at a ton of stocks on multiple time frames and I want to anticipate the scenarios of what might happen and what could, possibly be coming. So, I'm looking at some of these EV stocks, and this is how I anticipate them. These are what I'm looking for to happen. I draw my little sketches in. So this stock, AXTI, here's a pretty darn tight consolidation, and we can see that better on the daily time frame. Yeah. And a lot of people are looking to buy the breakout. I think it's more likely we're going to get a shakeout, maybe to the 20-day moving average first. So the people who are buying in this range, I think they're about to spit it out. It comes back up, and then the trade comes. So it's not just about, looking at the chart, but anticipating, like, I've done this enough times where I, buy that breakout and get burned. So, yeah. If the stock does get above here, though, I could have my stop either underneath this little low or under here. I might take a half size position at this point with a pretty tight stop there, especially when I would look at the market right now. The SPY and the AQs are down a little bit, Russell 2000 semiconductors. So right away, it tells me, don't be too aggressive from the start today. Let them settle down a little bit, and don't be the dummy who chases a gap open or in an individual stock. Just, sit on your hands a little bit first.
A great instructional interview again, Brian. I really want to thank you for your time. And I recommend Brian's book, Technical Analysis Using Multiple Time Frames, for both the newer trader and the professional trader as a primer reminder. And you could find Brian on Twitter at Alpha Trends. And I want to thank you so much, my trading warrior brother. It's great to talk to someone that I learned from during a discussion, kind of like going over your charts, and you see things when you talk to people, contemporaries, and you find someone that has done it well for a while. you may not learn from the same experience, but you learn from the experienced, which you are, Brian, and
Well
appreciate.
said. Thank you. I appreciate that.
Yeah, I appreciate you being
Likewise.
here to edify our community, Brian. Thank you so
Well,
much.
Thanks for having me on, and trade well.
And I hope you and your loved ones remain untouched from the invisible enemy, and you have a great holiday season despite all that. Glad to know you. I'm glad our paths crossed.
Me too, Dale. Thanks so much.
All right, buddy. Everyone,
Okay.
Brian Shannon, and get his book and follow him on Twitter. And there's a lot of knowledge there. So that's going to be a wrap for our Turnaround Tuesday, everybody. And we'll see everyone tomorrow. Good hunting the rest of the day. Don't just count your shares, count your blessings, and we'll see everyone tomorrow. You're welcome. You're welcome. A lot of people saying thank you to you, Brian. Adios.